Hey guys, it's Dave. Happy Monday. I hope you had a good weekend. Today I wanted to tell you about a new stock I'm buying, and shockingly, this one is outside of the space industry. Yes, I know the channel's kind of migrated to being a space-focused channel, but I do occasionally still buy stocks outside of the space industry, and I still want to share that with you. So if that's not really your cup of tea, that's fine, and I'll see you in the next video. But if you're interested to hear what stock I've been buying lately, let's continue on. I hope you enjoyed that throwback intro. I did kind of throw that in there because it's kind of a callback to when the channel was a little bit more general investing. Before we dive into this, looking at this stock, I hope you'll consider hitting subscribe and like if you enjoyed the video. Every subscriber helps out so much, and thank you if you are already a subscriber. With that out of the way, let's dive into the latest stock I'm buying. At first glance, when I tell you this stock, you might think I'm a little bit crazy. Looking at the 52-week range, it's just been wild for them. They've had an amazing year, and I will be buying basically at the very top of the 52-week range, something I really never like to do, but I'm kind of just gritting my teeth and doing it on this one because it's one I've been wanting to hold for a long time. And I am, of course, talking about Nvidia. I'm sure you guys are all quite familiar with the company. It's one, like, basically every day I've heard about it over the past 10 years. I've just thought to myself, why don't I own this company? Like, I've always felt that it should be in my portfolio, and it's never seemed like it's been the right time to buy it, whether I've had capital available, whether the stock was just looking too high at the time, and I always wanted to wait for a pullback. I never ended up adding it. And this really falls under the category of what I would say are a very few number of stocks that I think you can just hold for the long term, and they'll always really do well. They tend to outperform the market. They tend to innovate very well, very strong management. Reminds me of a Microsoft, something that I also love to hold over the long term. That great CEO, great management, continue to grow the top and bottom line, and really just a great company. There's been a few others like that. I used to put Google and Apple under that category. Maybe still do, but I'm finding the innovation is kind of lagging a little bit from those two. But anyway, so yeah, every time I heard Nvidia mentioned over the past 10 years, I've just felt like I should be owning this company, and it's just never been the right time. The other thing is, I do work in IT, and it's really, I have no excuse. I should have been in on this one earlier, but I always just thought, like, okay, they're making GPUs and graphics cards. That's pretty cool. Gaming's like a decent market, but, they'll never get that big just with graphics cards. And boy, was I wrong. I really didn't predict the massive demand for their cards when it comes to things like cryptocurrency and mining, as well as in the data center, as for training AI, big thing right now. Everyone needs NVIDIA GPUs and NVIDIA cards, clusters, massive thousands of clusters of them to do their training on their AI algorithms. The demand has been insane, and it hasn't been due to gaming, and that is something I didn't see coming, which I really should have, being working in IT. And all I can say is, yeah, I screwed up on that one, and I should have been holding them. Maybe now doesn't seem like the perfect time to buy them, but screw it. This is something I want to hold for the next 10 years, not something I'm trying to time and get in and out of in a year. So even if it isn't the perfect time, and I'm going to go into a little bit why I still think it's a decent time, even if it's not the perfect time to buy, sometimes there's just never the perfect time. You just got to do it, and you'll be happy when you're holding something on a long enough time scale, if it's a quality company like I do believe Nvidia is. So with that out of the way, yeah, look at the chart. Obviously, 52-week high. They've gone practically like a 3 or 4x, I think about a 3x over the past year. Really wild run, and I'm buying at the peak, something I don't like to do. But let's dive a little bit deeper here into the company and tell you why I think, in this case at least, it might be okay. So here is that same Nvidia stock chart over the last 5 years, and below it we are now also looking at the price to earnings ratio, which is a key way a lot of people see how expensive stocks are is basically compare, the earnings to the actual stock price as opposed to just the number is just kind of a, it could be any number, doesn't really mean anything. A $300 stock could be cheaper than a $5 stock, depending on number of shares outstanding and all these other factors. So price to earnings ratio, a good way of trying to think about how cheap or expensive a stock is relative to how fast it's growing. And we can see that right now, the price to earnings ratio of Nvidia sitting at least according to this chart, around 63. That's not low, of course, but it has been growing very fast, and it's not as high as it was. So even looking back, a little further, even though it's at its highest point right now, it had a higher price to earnings ratio not that long ago. And what I like to do is kind of just see when I buy, am I above average on the price to earnings of the company historically or below? And we're kind of in that line, right? So like if you go across, sometimes it's below this line, sometimes it's above this line, but we are kind of in the regular range for price to earnings on Nvidia. So at least on that metric, it's not crazy expensive right now, even though the stock itself has had a good run. So have the earnings, and debatably, the earnings have had an even better run than the stock price has, surprisingly enough. Continuing on, so this is what I'm talking about. You can see if we go back to May here, the price to earnings ratio is actually 124, and the stock was $394 a share. So the stock continued to run up, but the earnings obviously ran up even more because the price to earnings ratio, as I said, now is dropped down to like maybe mid to high 60s, even though the stock price itself is all the way up at 547. And, even back in early 2022, it had a higher price to earnings ratio. If you dig a little deeper and talk about price to earnings and compare these things, you'll see that, just because the stock has run up doesn't mean, that it's necessarily super expensive. You also have to pay attention to what those earnings have done in the meantime. And I just wanted to share this with you, looking at some of the statistics. So obviously 52-week change, 200% gain, absolutely massive. I would never want to usually buy a company with this kind of gains over the last year, because I would say, well, I've just missed the run, right? And to think that it can continue that run after that point, boy, that's pretty rare. But on the other hand, the trailing PE 72, so that's over the past 12 months, the forward PE showing 27.7, which is, for tech, pretty reasonable, and shows the massive revenue growth the company is undergoing, because that trailing PE of 72, in order to turn that into a forward PE of 27, we're talking about huge revenue growth numbers. And also the PEG ratio, something I tend to look at, price to earnings growth. A normal rule of thumb is that anything below 1 in terms of a PEG ratio is generally pretty decent. We're looking at a PEG ratio of 0.55, which is pretty solid, even though we've had this massive 200% run-up over the past year. Now I just wanted to dive into Main Street Data. This is a pretty good site I do use fairly regularly for examining stocks. There is a referral link in the description below. If you do want to sign up and use that link, we both get a little bit of bonus and you'll be helping out the channel. But there is a free version if you want to check it out and not sign up, and I won't get a referral. That's totally fine. It does have some pretty cool data you can use just with the free version. Anyway, sorry for that sellout second there, but looking at the revenues, this is what I'm talking about. Look at this massive growth in revenues we've had over the past year or so. I mean, kind of justifies that massive run up we had in the stock price, and maybe even you could argue the stock should be higher. So we're looking at a quarterly chart here, not annually, but you can see, especially over the last couple quarters, just massive growth in revenue. It kind of bottomed, around when the stock was bottoming. So it wasn't all just macro events. The stock was actually, the company in terms of revenues was also not doing well. So that drop off could have been justified there. We're looking at going from, 6 billion-ish in revenues up to over 18 billion, and that's reflected in the operating income as well as net income. So we're seeing the previous quarter over $9 billion alone in that one quarter for net income, reflected in gross profit, of course, very high profits. It's just, there's a lot more money flowing to the bottom line, even looking at free cash flow, all these metrics looking good. So thinking back to when that stock was at the lows, and yes, we can all sit here and say like, wow, it looked so low, we should have bought. If you take yourself back to that point in time, let's hide this and this is where we were. So if you look at the actual income, it was dropping sharply. We were having a horrible macro environment. We were having rising interest rates in tech in particular, as well as growth companies were just falling off a cliff, even if they weren't having their own dropping revenues. Again, free cash flow was barely in the positive here if we're hiding these quarters. And you look at that and you could see like, oh my God, like it wasn't necessarily looking like a for sure home run at the time. There's always reasons to be scared. I always think like every time I look at a company I've bought and done like absolutely amazing, and I put myself back at the time when I made that buy, there was always reasons to be scared. Like it wasn't just the company itself and the underlying was performing amazing on every metric. So yeah, it's very easy to say right now it was stupid cheap back then, and obviously we have the benefit of seeing these massive growth in income numbers. But at the time, we were having falling revenues, falling income statements. It was a very difficult macro environment. And if you want to know why I didn't buy at that time, the answer is I had no cash. Like I had no free money available. Most of my free money was going into a renovation of my house, plus every stock I was holding. A lot of growth stuff was falling off a cliff at that time as well. So it would have been also extremely painful to sell, say, my Tesla and buy this, because it would have also had a horrible run. And it was really a tough time. So obviously looking back, it would have been great to sell something and buy Nvidia, but it was a very difficult time, and that's just how it goes sometimes. So right now, I feel like I can make a trade and buy at least a little bit Nvidia and hold it for the long term. And I think, great company, well managed. Is it incredibly cheap right now? Might I be able to get it at a lower price? Possibly. But if we're talking 10 years, I think I'll do very well just to hold it and continue to hold it over the long run. I think it will outperform the markets. The demand for their products is off the charts. AI is only growing. I think it's a great company. It's, again, every time I've heard it mentioned on CNBC or any other YouTube channel, I've always been asking myself, damn, why don't I own this company yet? And it's never been the right time. Maybe now isn't the perfect time, but screw it. I'm buying it anyway. Taking a look at the balance sheet, also looking pretty good here. We have total assets around 55 billion, maybe over that. Total liabilities only down around 20 billion. So it's not like they're not even profitable yet. Obviously, as we saw from the previous charts, no concerns around liquidity or being able to invest in future endeavors. Really, they're just a juggernaut of a company at this point. And gross margins, something we haven't looked at yet, as strong as they've ever been in the last 10 years. So we're going back to 2014 here. And gross profit margin north of 70% right now. We're probably looking at like 74%, which is the highest it's been, over the last 10 years. Same with operating margins, the highest it's been over the last 10 years. So looking very good on the margin front, not just the amount of revenue coming in, but the amount of profits they're actually capturing from that revenue is looking very good. Just really amazing numbers. I always want to see a gross profit. Like, I think even a 50% gross profit for a lot of companies is good. We're talking 75, like that is amazing. And just breaking it down by segment. So as I said before, I saw it, 15 years ago as a video card company building out graphics cards, and I was like, okay, that's cool. Yeah, they're good at what they do. It's a good company. Is the growth really there? Like, how big is the total addressable market? And I just missed this entire data center segment. So going back to, 2016, they were just kind of getting started in the data center. Most of their revenues coming from professional visualization, gaming, that kind of thing. Data center in the dark blue grows absolutely massively, especially in the last few quarters, just absolute massive growth from data center. Obviously, a lot of this is coming by everyone needs AI right now. LLMs are the big new thing, and they need Nvidia processors and GPUs to train their AI models. So very important. I know Tesla's Dojo is coming, and maybe they can sell that out and train other people's AI for them. But even when that comes online, I think Nvidia is still going to be in a fine place. Not everyone will use Tesla by any means. And really no concerns. And even beyond that, their chips are now being used in cars more for self-driving vehicles. So that's something I know, again, Tesla will not be using NVIDIA chips. They'll be using their own, and that's great for Tesla and full vertical integration. And I do own Tesla, but I don't see a conflict with owning NVIDIA. Other car manufacturers are certainly not going to make their own chip. It's a completely different skill set, and NVIDIA will be there providing those cards to do the processing for the full self-driving, which I do think will happen one day. Whether these companies end up licensing Tesla's own FSD or get their own system to work perfectly, it doesn't really matter either way. They'll need a chip in there. There's a decent chance it could be an NVIDIA chip. Yeah, the demand just continues to grow. Even crypto, now that they've been added, approved for a spot ETF, crypto could continue to have future growth that will again require NVIDIA GPUs and clusters for the mining and for the backbone of the cryptocurrencies. There's been so many times when I've been investing that I've looked at a company and it's run up a lot, and I think to myself, damn, I really missed this amazing opportunity. I missed the boat. I missed the train. I wish I was a member of the stockholders. I wish I could have got those returns, but it's too late now. Might as well not invest. If I fast forward 5 years, 10 years, turns out it was not too late. If you bought in, even if it seemed high at the time, even if the company had gone up a lot, you still could have done very well for yourself by investing. If it is the right kind of company with the right kind of management, the right kind of, growth, total addressable market, and demand. So I think that's where NVIDIA is. I should have bought it 10 years ago. I should have been owning it basically forever. I haven't been. It may not be the perfect time. I probably in the past have said to myself, well, it's too late. I missed it on NVIDIA. And even today, we're buying at near 52-week highs. I don't care. I think over the next 10 years, it's probably not too late for this company. And we'll see where it goes. I continue to hold my Rocket Lab. I continue to hold my Tesla and some of my other companies as well. But this is one I think I can just be comfortable having in my portfolio, not needing to watch too closely every single day. It's a profitable company and very well run. So I hope you enjoyed this video. I know it's a little bit different than our usual topics, but I do like to share every time I make an investment move. I always find it fun to talk about. And even just the fact that I am making a video video on buying a company really forces me to do the research that I may not have done in the past. So even making this video just helps me with my own investing, even if nobody watches it. I hope you got some value out of this video. Let me know down below how you feel about Nvidia stock or any other stocks you've been buying. Always interested to hear, and I'll see you in the next one. Bye for now.